Okay, in case you haven't met me, my name is Paul Lesher. I am George's son, and I will be doing today's presentation as Act 51 was something that I developed, and MERS is another thing that have been heavily involved in. So I will be doing today's training session. And also, if you hear any construction in the background, is they're doing construction in the room next door. I don't know if that'll pick up any, but just be aware that if you hear some background construction noises, is they're doing a bunch of construction in our new office. So to get started, there we go. Our next training session will be July 7th, 11 a.m. to 12 p.m., another hour session. And this time the topic will be discussing benefits, how you can use benefits, and how they work in our system. So we will be going over that. So to start with, part one of today's session will be Act 51, and then part two will be MERS. So I'll be going over Act 51 and then showing it off, and then before I move on to MERS. So Act 51. So we designed it as a helper that we create the first 17 pages of the Act 51 report in an Excel spreadsheet based on account numbers that have Act 51 lines assigned to them. So all our calculations are formula based for easily checking the calculations. So behind the scenes, we're actually in our code making them Excel code. So in Excel document, you'll see like equal sums in that instead of just a number. So if you need to change anything, you can. Account numbers may appear on multiple lines based on the line assignment in the accounts menu item. You're allowed some of the account numbers are included in multiple Act 51 lines, so we accounted for that by in our accounts menu item. Most pages have a drill down so you can see what account numbers and amounts make up the total for each line. Like in Excel, they'll have all the rows are hidden. So on the left-hand side, there'll be a button that you can click that'll expand or collapse the rows that have those account numbers. Currently, pages 9, 10, 11 do not have a drill down just by nature of that page. For first pass, in the future, we may add it, but at its current state, it does not have one. Also, in all the summations of each line, um, we divide by two if there's a drill down because we just take the sum of the line plus all the totals at the bottom. It was a lot easier than trying to keep track of where exactly the actual row is. So we just sum up everything, which is basically doubling, and then we divide by two. So if you're looking at the formulas and see a divide by two, that would be why. We don't want to display a number that is double what it should be. So all data generated from the database are they're based on the fiscal year. You select the fiscal year and it's any data with any transactions within that fiscal year is reported. We also added an additional page at the end that is basically the distributions amount summed at the third level. So you'll see the third level account, and then you can click the little plus at the end, and you'll see all the level 7 accounts under that line, under that account, if there is any amount. All sub accounts for an account that has an Act 51 assigned are included in the Act 51, unless, of course, you actually assign that sub account, or we also have an exempt line. Again, I'll show all that. Um, so like if you assign a level 3 to an Act 51 line, all level 7s underneath that level 3 will be included in the Act 51 report. Unless if that level 7 has a different Act 51 assignment, then it will be go where that level 7 is. So we do you don't have to assign every level 7 to an Act 51 line, but if you need to assign a like an individual one, then you can. So we also added a tool in the tools module that is called Change Act 51 assignments. So this will automatically assign accounts to the Act 51 lines based on information we gathered when developing this tool. We used the accounting manual and we hired a consultant, Brian Decker, the former finance director at Chippewa. He worked with me and to get the correct accounts assigned to the correct lines. So we did have some help with that. There is two buttons, a clear all and a fill assignments. It's called a clear assignments and a fill assignments button. The clear assignments button will remove all assignments no matter what. It'll just clear them all out, and then you'll have no account numbers assigned. The fill assignments button will auto assign Act 51 lines to accounts. So it'll automatically, based on the information that we have, that we gathered when developing this, it'll try to map out your account numbers to Act 51 lines. Now, sometimes it may not be 100% accurate because you may use a different level 7 than what we're expecting. Um, I will, that's when we have a little bit of free time, we might take a look at that and try to better get our query to handle more accounts. But for now, it is that. However, when you do click fill assignments, it will not override any accounts previously assigned. It will only fill in the missing assignments when clicking the fill assignments. So if you've already started or you have gotten through most and you just want to make sure you didn't miss any Act 51 assignments, you can click on the fill and it will fill and try to map the accounts, but it will not, if one's already there, it will not override it. So once you have finished running this tool, you can see which account numbers have been assigned an Act 51 line in the accounts menu item. There are lines that we cannot assign by hand, so they'll have to be manually assigned. There are also accounts that can either be primary, local, or county, and verify the auto assign the accounts to the correct line. Sometimes we just threw everything under either local or primary or county, depending on the situation. So you might want to check that. So based on talking with Brian, these are the Act 51 lines that we don't currently have auto assigned is lines 33, 55, 63, 73, 92, 93, 125, 126, and 175. Those are all lines that we cannot auto assign. Those will have to be assigned by hand. Uh, the accounts, so when you're in the accounts menu item, we have a drop down for selecting an Act 51 to assign the selected account to. Some rows in the dropdown may have multiple Act 51 lines, as the data may appear in more than one Act 51 line. So it'll be like line 53, comma 125. So it'll appear in both rows on the spreadsheet in both 55 and 125. There is an exempt line at the top of the dropdown if you wanted that account to be exempt from the Act 51 lot calculations. So, for example, if you assigned a line at level 3, then when you run the Act 51 generator, all the level 7s will be included in that Act 51 line. However, if you didn't want one to be on there, you can make it exempt and it won't show or have the data on the Excel spreadsheet. Yep, this is useful if you do not want a child account to be included as an inherited account from the parent. To remove an Act 51 assignment from an account, you can either clear the field or assign it the blank there line at the top. There is a blank line at the top that you can click and it'll clear it, or you could just highlight it in backspace or hit the delete key, and that'll clear the assignment. Just make sure, obviously, to click save, the save button to save all the changes. You can make all the changes you want, but if you don't click save, well, it's not going to be saved. So just make sure you don't miss that last step. And also the search window, we do have a column for the Act 51 lines, so you can filter and find what accounts are assigned to what lines. So if you need to do that. So that's kind of a brief overview of what exactly our Act 51 is. So I'm going to go ahead and now show. So the first thing I want to show off is in Tools. We have under Utilities, we have this Change Act 51 Assignments. We have a little text. It will update your Act 51 settings across all your accounts. This tool, it could either fill or clear. And probably you should only technically use it once unless you really want to restart. So if I click on clear, it'll clear all my assignments and it cleared them all. And then if I click on fill, it'll pop up this confirmation. And if I click yes, it has now filled all my Act 51 assignments. So that it's a pretty simple tool. There's not a whole lot of things you have to do it, but I just want to point out that that's there for you to get a start. So next, in General Ledger, if you go into accounts, we have this Act 51 line drop down, which has all our Act 51s. There's the blank line. There's the 0 for exempt if you don't want that account number to be included in the report. And like here, you can see we have, let me get the mouse on there, 5 and 6. See line 5, comma 169. So anything assigned to this Act 51 line will appear both in line 5 and in line 169. So if you see that, that's what that means. And we to go all the way to page 17, which is line 244D. Another thing that I don't think I mentioned in my slides, but also if you see like line 46, P, L, and C, obviously for P that's primary, L is for local, and C is for county. So if you specify 46P, it'll appear under line 46 primary. It'll appear in Act 51 line 46 under the primary column, and this will appear under the local column, and this will appear under the county column. So if you see the P, L, and C, that's what those are for so. And then in the search bar, we have an Act 51 line column. It's the second one from the end. You can always move it if you want, but it doesn't save that. You can filter, click the filter if you're looking for something. If you're looking to see how many people have 105 assigned, you could do that. Type it in, and then you can see the two account numbers that have those assigned. If you're looking for a particular assignment, if you just want to see all the account numbers that have been assigned, you probably want to uncheck the blanks. And I'm not sure why there's a interesting that it's not, that's fine. But these are all your account numbers that have Act 51 assignments. You can easily feel like if you're looking for a particular account number that you want to be assigned. So then if I scroll back to the top, I just want the level 7s. As I pointed out, all the accounts all the sub accounts are included. So like this level 7 201 is included in the inherited Act 51 line cache. And I believe that one's at the third level. So I have it at here. Yep. So this one happens to be at the third level. So it is inherited from cache. So if I go to the fourth, it says inherited from cache. But if I change it to deferred expense aid and click save, then it changes all the sub pieces to deferred expense. So this one's cash, but then this one we changed it to deferred expense. And now all the sub accounts are also deferred expense. And then to clear it, you could just either clear it and click away and save. And now it's back to inherited from cache. And you can also select the blank line. And now it's back to inherited from cache again. So that is kind of an overview of how you assign them through the Act 51. Most accounts will be assigned at the third or fourth level, and then all the level 7s will be summed up. What's nice if you do it that way instead of actually assigning every account at the 7th level is if you add a new account throughout the year and its parent already has the is already assigned, then you don't have to keep adding on to it. And again, once you set this up once, it shouldn't change much year to year. So it might take a little bit of time to set up, but once it's set up, it is a good calculation. So I'm going to go ahead and now we're still in general ledger. Under utilities, we have the Act 51. It pops up as an Excel spreadsheet. I made mine bigger. I think the minimum size is that, but I made mine bigger. You select the year, and it's any year you have data. So my database somehow has a 4021 effective date, but I want to go 2023 and I want to load. We currently don't have a physical report available. That is probably something we will add is a report so you can see a list of accounts without. Technically, you can go in here and if you're in the account maintenance item, click on the filter and instead of select all blanks, and there's one that's yeah, empty string. And then these are all your account numbers that are not assigned. And some of these are inherited and some of these aren't. So we don't currently have a way of knowing which account number is, or don't have a way of looking at which account number has a higher account level already assigned. But that is something that we'll definitely take a look at. We've been thinking about doing, but it just hasn't gotten put on the front burner yet. So the quickest way currently is to use this filter in the accounts and just search blanks. And then if you really want to just do on the seventh level, after you're done with this filter, keeping it filtered, do a second filter and remove all blanks from here to get just your level 7 accounts. And we may eventually add, instead of saying inherited Act 51 line, cash, we might also have at what account level it's rolled up, but currently we do not have that. So there is a way currently we have it, we're just not in a report style. So I'm going to load that again. Just also so you're aware, this sometimes takes a bit to load. It depends. If it doesn't depend on much, sometimes it can take up to 5 to 10 minutes to load, depending on how fast your connection is and how many account numbers it goes through. That's another future enhancement is we're going to be looking at the speed up time for it. But for now, it runs and it does the calculations. So it also sometimes it takes a minute or two after it's done creating for these buttons on the side. These are your rolled up accounts. So if you click on it, you can see all the accounts that are underneath the cash account. And at this in this report, they'll all be at the 7th level. You won't see like I believe cash is assigned at 20101. You won't see it here. You'll just see your max level accounts because that's where the actual transactions and data are. So, and again, I tested this with the road commission that I had. I actually went to their site and got the 2023 Act 51 report and did a comparison. Our auto generator got some of the lines right and some of them it did not. So, again, that's something eventually we'll be taking a look at it to try to get it more accurate on the auto assign. As you can see here, these are supposed to have information. And you can see if I go to total assets, we have some E6, E through 105 divided by 2, because if you look at it, we're including these roll-ups. So this line is the sum of the sub-accounts. So when we're doing a sum, we're not just summing up this one and then that line, which is 15 instead of 2. We're just taking everything, which is lines 6 through, actually, you can look at the formula, 6 through 105. And then we have to divide by 2 in order to not double count. So I just want to point that out that if you see the divide by two, that's why we're doing that, as opposed to keeping track of every single line where that row index is at. The code behind the scenes gets quite messy at that point. And also, it could take longer to, the amount of time it takes to generate could take longer if it has to do that. And then again, page three, when you click on a page, sometimes again, it takes a minute for the plus arrow to show up, or you have to click inside the page. That is something that's part of this Excel spreadsheet we're using. So you may have to click on it to get the plus arrow. We have page four, which is your revenues. And again, in an ideal world, this won't be all zeros. This should have a bunch of account numbers assigned to it. Continue stage six. Page six is your statement of expenditures. And as you can see, we do actually have account numbers assigned. So with primary, local, and county, we don't have any assigned under county. We have all of them assigned. And in the total column, we just have all the accounts. You can see it's again formula based. We're taking this total plus this total equals this total here. And obviously this column is going to be tied to the longest. It's quite a lot of account numbers that are zero. We thought about showing only account numbers that have data, but then we decided that it'd be a good idea for them to see all their accounts assigned, because if their if their numbers are off and they're trying to find out what account number is not on there, at least you'll have a list of all the account numbers that are tied to that Act 51 line. So we just want it may then that's why we have them rolled up. Because I think that's what 615 account numbers tied to that one row. So that is quite a lot of accounts. So then page seven, this is one of those that I don't think was rolled up. And that's just due to the nature of how this one operates. I think page eight, that one does have roll ups. As you can see, we ended up with 4,000 lines in Excel, most of which is rolled up. Again, page nine. This one is your fringe benefits, and this is where you get your fringe spread calculation from. And then this is the overhead, and this is your cost of roads. And again, if you're going through this, you may need to tweak what accounts are assigned at what level. Eventually, we will probably have rolled up accounts here, but it's going to take some time on our end to get it right. We didn't feel like that was absolutely necessary for a first pass on that. That is a future planned enhancement. Page 11, another one where it's broken out by SOEs. And again, like I said, we worked with Brian at Chippewa, former finance director at Chippewa, with this. So he helped us kind of get the assignment down for what it should be. Page 12 has that. Page 13, I don't think there's really any data here. Page 14, we don't do page 15 is the only one we don't do. And then this is your indirect equipment expense. And this is broken out by SOE. So, and this is line 244. And these are based on the sixth level. So the 05 means that's your sixth level, and by SOE. So that's 05, all your PRs, your FBs, which is our new, we introduced it last year for fringe benefit. We use now FB for fringe benefit for your journals to break it out. There's your transfer vouchers, your AP, your CRJs. So any account number assigned at the 244 to line 244, we broke it out at the sixth level and then also by SOE. So, and then last on the Last one is the distribution 201. And then you click the plus arrow, you can see all the account numbers assigned, or not assigned, that are underneath that level three. So I believe in here this one only includes account numbers that have a transaction. And again, the total dollar amount might be zero, but then the sum of the transactions will be zero. So even if it's zero here, there still could be transactions that cancel each other out. And like this might actually be zero because the sum of all the transactions are zero. We don't show all the transactions, we just show a sum total of all the transactions. So that's why it's there. Even though it looks like it's zero, that means it had at least two transactions that canceled each other out. I am going to pause there for a minute and before I move on to MERS and answer any questions you guys have about our Act 51 generator. If this was an IRS thing, yes, for the state of Michigan, I don't know if they'll ever allow a direct file upload. I could see that in the future. I don't know. I haven't looked to see if they even offer that now. I can't get access to their website because I'm not a municipality, so I haven't really looked outside of some help documents at exactly what you guys have to do to upload your Act 51, but I wouldn't be surprised in the future if they do allow a direct upload. That would not surprise me at all. And if they do allow a direct upload, then we will probably see what we can do about doing that. The problem with the direct upload is it's a lot of data for a file. So they would have to know all those account numbers. I guess it would be that bad if they just did a like a CSV file. The problem would be in some of these pages, it'd be harder to map because it's not like a one for one on the line because you have primary, local, and county. So they would have to do it in a way where their system would know what's the difference between line 129 primary, line 129 local, and line 129 county. So, but again, I would not be surprised in the future if they did that. All right. If there are no more questions on Act 51, I'm going to give it another minute or 30 seconds and then I will move on to MERS. I don't see anything more. If anything you want to ask anything, go ahead and I will answer it when I can. All right, so MERS, I'm going to be talking about how to use MERS in our software. I'm going to give an overview of the whole process and then I will show it in our software. So we offer MERS calculations and upload file for the new Empower. We currently support 4 different plan types: defined contributions, defined benefits, a 457 plan, and a healthcare savings plan. You set up specific deductions in the deductions type menu item. You can set up benefits in the benefits, and then you link deduction codes and payroll types. And then you assign and benefits, if you're using benefits, to an employee in the employee comp package. And then when running payroll, make sure to include the MERS deductions codes you are using in the list of deduction codes to calculate. And then when you have finished your payroll calculation, you can use the MERS export file menu item to generate the upload file. So that's kind of a 1 second overview of the process. You set up deductions. You can possibly set up benefits. And if you use benefits, you'll need to set up a payroll type for that benefit. Then you assign it to the employee. You include those deduction codes in your payroll calculation, and then you use the MERS export file menu item to generate the upload file. So for deductions, if you're setting up a MERS deduction, in deductions, we have plan type, and you set the retirement plan type as MERS. And once you do that, a box will appear, and you can specify the MERS plan type. It'll contain the 4 Plan types I mentioned before, defined benefit, defined contribution, 457, and healthcare savings plan. If there is no plan specified, then the export file will not work. You can still use calculate MERS, it just won't it won't work with the export file. So you can select a contribution source. Um, there are three different sources: employee, employer, or both. Our current version of software that you guys have doesn't have that. Our release that we are planning on releasing, uh, assuming all testing goes well this week. We're in the final stages of testing, so um, that should be released where you now have employee, employer, or both. I think before it's just employee or employer for the contribution source. So if you choose the employee for the deduction code, then the amount calculated in deduction is taken out of his pay like any other deduction. It's just a deduction. If you specify the employer pays for the amount, it doesn't come out of the employee's pay, and this is usually done through a benefit. Now, again, if you specify employer but don't set up a benefit, it will take money out, like an employee deduction. So if the employer pays for this, um, you probably want to probably set up a benefit for that. So for both, the employee pays the deduction amount and the employer pays a match. So in that deduction code, you can specify parameters for that matching value. So you can check the exempt box if the deduction code is exempt from all taxes, federal, state, local, FICA, which is Social Security, and Medicare, and other deductions. That is your pre-tax MERS. You can check deferred comp if the deduction is exempt from federal, state, and local, but you do need to take Social Security and Medicare out, then you can check on deferred comp. You can specify a pay to if you want a check or voucher to be generated when calculating. If you want a check or a voucher, you can set up an address in deduction addresses to send a check to or a voucher to if you're going to use ACH. Yeah, if the deduction address has a bank and routing number, the total for that deduction will be included in the ACH file upload. Check the include benefit earnings if you want to include benefit earnings. It'll just include if you have, again, benefit earnings where the employer is paying for something that's not part of his regular pay. It's typically not common. I haven't seen it, and I have several test databases that have MERS, and I have not seen it checked, but it is an option that is available. Make sure you set any MERS code in deduction types to inactive if you're no longer using it. I believe that is something new um, in deduction types. You can now set deduction codes to inactive if you are no longer using it. However, keep in mind that our current payroll calculation does not honor that inactive flag. So what the inactive flag will do is in employee comp package, it won't show up on the list of deductions to add, and it won't show up in deduction types unless you click the limit. If your plan type requires a box 2, we have a list of the box 2. So it appears on your W2, not box 2, your W2 box, rather. We have that available. If you specify that this deduction appears in box 12, we have all the box 12 codes. For box 14, you just enter in a code. So for the MERS, again, continuing for the MERS deductions, once you specify the contribution source, then you could specify the calculation type. We offer a MERS calc type, which is calc type 12. That's the standard MERS one. But there are also, you don't have to use that for a MERS deduction. There are other ones that you can use for a MERS calc, and the calc type is in parentheses. So if you're going to use MERS, which is calc type 12, what it does is it takes the taxable gross earnings, which taxable earnings excludes non-taxable and exempt earnings. It subtracts all the MERS exempt earnings. So if your payroll type has MERS exempt, those are not included in this MERS in this calculation. And it will also subtract benefit earnings if the deduction does not have the benefit flag. It does not have the flag include benefits checked. It multiplies the subsequent dollar amount in parameter one of that deduction to get the deduction amount. Also note that all our percents are entered as 0.0. So if you want 5%, enter it as 5.0, not 0.05. So it's a little easier for you to look and read. So if you look at an employee comp package when you're filling out the deduction amount, and then parameter four is added as a dollar amount at the end if there's anything in parameter four. Across the board on almost and pretty much all our deduction, I think it's almost every deduction is a dollar adder for the deduction. So I'm not going to call it out each time when I'm going through these what the parameters do. That it's premium four is just a dollar adder at the end when the after the percent has been the deduction has been calculated. Parameter four is just added as a dollar amount. Typically, that's you don't use that at all, but there could be some cases where you need to make an adjustment, and then that's where the addition or subtraction from that deduction comes into play. So you can also use adjustable straight dollars, which is 6, non-adjustable straight dollars, which is 9, and straight dollars adjustable, which is 17. That one takes the gross earnings, which is again taxable earnings minus non-taxable exempt earnings, and multiplies it by the percent in param 2 to get the deduction amount. Note that there is no MERS exempt from here, so just be aware that it'll include MERS exempt earnings in here. So if you have pay codes that have MERS exempt earnings, you may want to not use 6, 9, or 17. It adds the amount and then in parameter 1 to get the deduction amount, which technically, yes, they do have param 4 as well, but that is an adder. Again, that's only supposed to be used if for like a one-time adjustment. Also, keep in mind that Calc 6 allows negative, while Calc 9 does not, which is why adjustable versus not adjustable, meaning you can't add or you can't subtract for the dollar amount. So if you're using a benefit, you probably want to use for your deduction code a benefit deduction 27. This is use a benefit. This is the pay code you're going to want to when you're in the benefits menu item, you're going to be wanting to use a deduction code that has calc type 27 benefit deduction as your linked deduction code. No parameters should be used as the deduction amount is taken directly from the benefit amount. So you can specify an adder, but I wouldn't use that unless you have a very specific reason. So this is typically used when the contribution source is an employer. So if you have an employer, you probably want to use and if you're using a benefit. So don't use this unless you're using a benefit, is what I'm going to try to say. And then we have a bunch of different types, 8, 15, 19, 22, 25, 24, and 30. They're all retirement deductions. They can be used. The types that have the MERS exempt in the name will remove the MERS exempt pay from the total amount from the payroll. So there's like MERS exempt adjustable straight dollars, MERS adjustable, MERS exempt non-adjustable straight dollars. So if they have the name MERS exempt, they will remove the MERS exempt pay. You probably want to run a test payroll to verify if the deduction amount is correct if you're using the retirement ones. So then if you're going on to benefits, if you're using the employer, you can use a benefit if the contribution source is an employer. That's the best use of it. In benefits, you probably want to use calc type of 1, which takes the taxable gross and multiplies it by the percent specified, then adds anything in the adder. And then param for a benefit, you specify in the benefit settings the parameter. But then in employee comp package, you can override that parameter, the percent in parameter 1. And then param 2 is used as the adder for the benefit. And then when you're in benefits, you need to link a deduction code and payroll type to link the benefit to. It's not required to be 27, but we highly recommend that it is calc type 27 for your deduction code. That's the benefit deduction. And make sure when you're running payroll calc, you include the linked deduction in the list of deductions. Otherwise, the benefit will not be calculated. So if you don't want the benefit to be calculated, like if you have multiple payrolls in a month, but they only get this once a month, then you can just exclude that deduction code and the benefit will not be calculated. So how that works is when you run payroll, the dollar amount is calculated to the linked payroll code as earnings and then removed from the net check by the linked deduction code. So we basically give him the money and then we take the money back. And it'll show on his pay stubs in as a payroll code as earnings, and then it'll also show in his deductions as a deduction. So, and especially if it's pre-taxed, no, the taxes will not increase. Yep, it'll show both the earnings and the deduction. And then for the payroll type, you create a payroll type to link to the benefit. This is where the benefit earnings will get posted to. Typically, from what I've seen, you want to specify an account number in the payroll type. If you're using my work, you probably won't want to make sure that no employee has permission to post a time card to this payroll type, unless you want to allow employees to post to that payroll type, but I don't think that's a thing. You can if you want to, but we would recommend that payroll type is you don't have permissions to, so they can't post to it. Checked the MERS exempt box to make sure that the MERS earnings are not included in this deduction, or that the earnings from this pay code are not included in your overall calculations. You don't want to be accidentally adding more to a other MERS deduction. So if you want the benefit to be non-taxable, you have one of two options, and these are exclusive options. Please only pick one of them, not both of them. You can make the deduction code exempt, or check, I don't say that is a typo, or check the taxable, or do not, yeah, nope, that's not a typo, or do not check the taxable flag in the payroll type. So either in the benefit, either in the deduction, make the deduction exempt, or do not check the taxable flag in payroll type. If you do both, what ends up happening is we end up reducing your taxes twice. Once from the pay code saying, oh, this is non-taxable, so we're going to remove that taxable amount from our FICA, Medicare, and that. And then when we get to the deduction, we're like, oh, this is also non-taxable, so we're going to do it again through the deduction. So you end up reducing the taxes twice instead of just once. So that's why you want to do one or the other, not both. So typically you want to make the deduction exempt and then the taxable flag checked in the payroll type, but it really doesn't matter which one. That is one of the most common mistakes I've seen when people try that I've gotten phone calls on with MERS is they accidentally had the deduction code exempt and the taxable flag not checked. So I want to make sure that they're crystal clear on that part. And also, you don't want to specify anything in the update the following bank dropdown that could be left blank. So in the employee comp package for benefits, a benefit is typically used again when the contribution source is an employer, but can be used for both as well. You can set up a benefit for both if the contribution source is both by linking that to a deduction and using the amount in that for the employee. So you get a benefit, you click new and you select the benefit from the drop down. The benefit will have default values from the benefit, but you can override the values in the parameter in our list of 5 parameters. And the other important thing is make sure the linked deduction code is in the list of the employee's deductions, otherwise the benefit will not be calculated. So in the benefit itself, you have that linked deduction, and make sure that the employee also has that deduction code in their list of deductions. You can fill in parameters for the deduction, and they will override the settings in the benefit. For deductions, add a deduction the same way you would add a benefit. Click New, select deduction from the dropdown. The contribution source doesn't really matter in this case. You'll have to add the deduction code for MERS if you want to use the MERS export file menu item. You can specify this one, you have to specify, again, if it's not a benefit, you'll want to specify the values for the parameters to use when running the payroll calculation. So I had to list the previous list for exactly what parameters, but typically if you're using Calc 12, scroll back slightly to param 1 is a percent if you're using 12. All the other ones, param 2 is a percent. And param 1 is just a straight dollar. Yep, params 1 and 2 depend on the calc type. And param 4 is an adder. So params 3 and 5 are used by MERS export file menu item as the matching values when the contribution source is both. So payroll calc doesn't use those, but our MERS file does. Param 5 is a matching percent of the deduction. So entering a 1 will be 1% of the deduction and not 1% of taxable gross. So, and when we're doing, again, I'll cover that when I get to the MERS menu item, but param 5 is the matching percent of the deduction. Param 3 is an adder to the matching portion. The one thing we do not currently have is a max parameter where the matching portion will stop when a max is reached. So if you only allow the employer contribution to reach a certain point, we currently don't have that. You'd probably have to go in there and remove the parameters by hand for now. We currently don't have the year-to-date total has reached this amount. Don't add in the matching portion. We currently do not have that. If you get an error trying to add a deduction code, just check to see if it's inactive inside the employee comp package. Inside there, we automatically hide all inactives. So go in and clear the filter status to see all active and inactives. It may happen to be inactive. You can specify a bank and a routing number if you want deductions to be included in the ACH file for the employee to be deposited in their bank account. So again, if you have a bank, if you have a routing and account number, then it will be included in the ACH file. Make sure you specify a C or an S for checking or savings in the routing. We will throw an error if you don't have a C or an S. Then in payroll calculation, make sure you have any MERS deduction codes if you want to calculate them. If you don't want them to calculate, then don't include them in the list. And as I mentioned before, if you don't include the deduction code that is linked to a benefit, the benefit will not be calculated and no dollar amount will be posted to the linked payroll code. For the employee to have the deduction calculated, the deduction code must be active in the employee comp package. If it is inactive in the employee comp package, it will not calculate for that employee. So payroll calculation does not honor the active flag in the deduction code itself. So if you set it to inactive in the deduction code itself, it will still calculate it if you include it in your list, but it does honor the one from the employee comp package. And then we also, the last part of the MERS is we have a menu item that you can generate the upload file for Empower. We take your data from payroll and deduction codes and produce the Empower upload file in a CSV, comma, separated value file format. As I mentioned before, we support 4 different plans: the defined benefit, defined contribution, 457, and healthcare savings plan. So if you currently are using Empower but don't have access to upload a file, you will have to contact them and get authorized to submit an upload file. Now, for the most part, they automatically, when they made the switch, made smaller plans have to enter them by hand. But again, you can contact them and get authorized. They'll ask you to send a test file before they will authorize you to use the upload file. And this test file is just a regular file. So when you go into MERS, there's no special like click test file button. You just generate the regular file and send it to them that you would regularly upload. So what happens once they get that test file, they'll map the fields on their end for uploading the file. To be fair, I'm not sure why they have to do that because they already have them because they sent us the formats that they're using and we produce them in our software. So I don't know why they have to do that, but that's for them, not me. Also, just a couple of tricks on if you're not getting the correct information on the file. Um, Here are some things you can check before you give us a call on the phone and saying there's something wrong, and then we will take a look at it. But just some very quick 5-second look. Do you have multiple payrolls selected? When the list of payrolls load, do you mean to have all of them selected or just one? I know some people do this once a month, some do it every payroll. Do you have all the deduction codes you want selected? Make sure you have all of them selected, or are you accidentally including one that you didn't want? Make sure you have the correct year and month selected, especially the year. Even sometimes I accidentally click the wrong year when I'm testing data. Another one is make sure the deduction code has the correct plan type and contribution source. So the payroll calculation doesn't care about contribution source. It is used by our export file. So an incorrect contribution source would not affect the payroll calculation, but it could affect what dollar amount is added in the appropriate column. So those are four quick and easy ways to check before giving us a call and having us take a deeper dive into why a number isn't showing up correctly. So the process that the MERS export file goes through is you select one of the four plans. We have a month and year select for the data, and we have a button that you can click that you call the load payroll data, and it will load the payroll infos for that month and the deduction codes. So only MERS deduction codes that have that plan type selected will load. You can select which payrolls to use. If you select multiple payrolls, the dollar amounts will be combined into one row on the upload file. And then you select which MERS deduction codes to include in the upload file. We do save when you select a bunch. If you have like two, that's fine, or you have like six for this particular plan type. When you select like three of them and then you click calculate MERS data, we save that information. So next time you run it, when it loads the deduction codes, it'll load the ones that you have selected already pre-selected. So you don't have to keep selecting the same ones every time. If you happen to have like 10 of them and you only use four of them, then it will load with those four selected every time. Same thing with the MERS plan number. It's provided by Empower. It'll save automatically with the plan type. And then you click the Calculate MERS Data button to calculate the upload data. All the data will appear in the grid below. I just want to make you aware that not all fields below will be included in the upload file. We just have all the fields available to us in that grid. And yes, different plan types require different fields. The better way to do it is when you click on the button to actually create the file, it'll generate the Excel document, which is exactly what is going to be uploaded to Empower. And that's a better way. That's the best way of looking at making sure all the dollar amounts are correct. The last part of the process is actually clicking the create button to create the Excel file. So how we decided what dollar amount goes into what column is the first thing we do is we split everything into two categories, post-tax and pre-tax. So pre-tax deductions are all codes that are marked deferred or exempt, so they're taken out before taxes. Post-tax exemptions are all MERS deduction codes that are not marked deferred or exempt, so they're taken out post-tax. And again, all those are calculated by the payroll calculation. So then after we have our post-tax and pre-tax deductions, each deduction is broken out by contribution source, employee, employer, or both. So for employee, the amount in each deduction code is added to the pre and post-tax columns. So again, we already broken out by pre and post-tax. Then we have separate pre and post-tax columns in most of the file formats, and that's when the employee, if it's an employee contribution source, it's just the straight amount for the deduction code. which again had been calculated by the payroll calculation. If it is an employer contribution source, it is added to the just like the employee, it is just the amount taken directly from the deduction code. There's nothing added. Like all the parameters are handled by the payroll calc, so it's just the amount in that deduction code, and it's added to the employer non-matching column. Again, this is something new that Empower did. Before, the old MERS format was employee, employer, and now they broke it out to employer non-matching and employer matching. And again, for this one, both the pre and post tax amounts are added together for the employer non-matching. It is just a total. So for the third different contribution source, which is both, which is employee and employer. So for the employee portion, it is the amount in the deduction code. So if it's $50 in the deduction code, that's the employee contribution. So for the employer match, the amount is the deduction, which is in my example 50, multiplied by parameter 5, which is a percent, and then parameter 3, which is added to that value. So for example, if you have a deduction code that is $50, param 5 is 10, which is 10%, and param 3 is 5, we'll take 10% of 50, which is 5. I don't know. Get math today. I believe it's 5. And but then param 3, which is 5, is added to that. Yeah, it's 5. My brain isn't working right now. So that's how the employee, the upload file gets, that's how the data gets added to the upload file, is through the parameter 3 and 5, which is 3 is the adder and 5 is the percent. The year-to-date plan compensation column is their total taxable earnings that is not MERS exempt. So, for example, it's again taxable earnings and non-MERS exempt. So any MERS exempt earnings are not included in the year-to-date plan compensation. The year-to-date hours worked is based on their pay code. Again, this is something new that Empower requires. If their pay code is H, we just add up the hours posted in all their paid that they've been paid for, not just posted rather. For all other pay codes, if they're salaried or commissioner, then we take the annual number of pays to get how many times they are paid in a year, multiply that by how many payrolls already calculated for that employer for the year, then multiplied by 40 to get an approximation of the year-to-date hours worked. So let's say they get paid 24, 26 times in a year, so bi-weekly. You have already calculated 10 payrolls for the year, and then we multiply that by 40 to get exactly how many hours they have worked. So it should be pretty similar to, in the end, it should look similar to the pay code as H. So if the employee's active status is not A, we will not even include them in this list if they have, even if they have the deduction code. So they have to have an active status of A. Another change that Empower put upon us is that all employees who are eligible but not, the file must include all employees who are eligible but not participating. To start with, when we run through the list, we exclude any employee that is type Z, is inactive, or is not full-time. They want full-time employees who are eligible. In the employees menu item, we have a field called eligibility. So what you do in there is you enter the plan numbers that the employee is eligible for, separated by a comma. That way, if it's left blank, it will not be included in the list. So that way, if an employee is only eligible for one plan, you could just type in that plan number and he'll appear in that list, but it won't appear in your other plans. So I'm going to go ahead now and go back to Profund and start that process. So to start with, we have MERS deductions. First one I have is right here, but the one I want to start with is a 457. This one is actually, we'll start with the top one. See, that's after tax. And that one's a non-adjustable straight dollars instead of calc type 12, box 12, and we have all these box codes. Contribution source is employee, so it'll take it directly from the deduction code. And again, it's not deferred or exempt. But if you look at this one, which is pre-taxed, it is a deferred comp. And that contribution source is employer. So again, you typically want to use this with a benefit, but you don't have to. So this one, my 457 deduction code, has a contribution source of both, and it is a benefit deduction, and it is a deferred comp. Healthcare savings, it's another benefit deduction. Do you even have a calc type 12 in here? Nope. Again, you don't have to use, there it is, MERS. Yeah. So this is your typical MERS calc type 12. Again, box 14, you specify the code. That one you just type in, and then you have the contribution source. So it's not that difficult to set up. So, like for example, if I do FICA, just or any deduction, you'll have to specify the plan type. So if I go back to MERS, you have to choose MERS. If you don't have anything selected, obviously this will go blank. But if you select MERS, it'll show defined contribution. If you have a loan repayment and then the contribution source, which is employee, employer, or both.
After the webinar, based on feedback, we made a change where instead of employee, both, or employer, we added employee, employer non-match, employer match, and then both. Both the employee and both are still the same, but we broke out employer match for an employer non-match because you could have a benefit that is an employer match benefit that's just a straight benefit, but it falls in the match column in the MERS export file. So this has multiple um, options for that. So I just want to point that out, that, and we didn't talk, that is something we added after the training session. So you'll see, instead of the 3 options, there'll actually be 4 options. So
Now, again, the current version of the software does not have employee, employer, or both, but we're again very close to getting the release out that will have this included. And if in our current version you just have employee and employer, the new version, everything that was an employer will be under both, because that's what it was before. Is if the contribution source was employer, it was technically considered both. So I would just want to make you aware of that when we do the update. If you need a pay to, you can specify a pay to. You can include the benefit earnings in the MERS calculations. So which means then if like this MERS is like 2% of your earnings and you have a bunch of already benefits calculated, it'll include 2% of those benefits in this MERS calculation. So I'm going to pull that down and I'm going to go to benefits. And then in benefits, we have your deduction code. You can select a deduction code to link to your payroll type, your calc type, which is typically 1, your percent of taxable gross earnings. It'll multiply that by 2%. And then if you need an adder to add to that. And unlike a deduction code, a benefit, this is universal. For each employee that gets assigned this benefit, it is the same 2%. You don't have to go in there and change the parameters unless you want to override them. So if I look at the deduction code, no, I don't want to save my changes. 457. Why is that? This is what's linked to here. So it is a benefit deduction, it is deferred comp, and it has a contribution source of both. So obviously, if you have a linked deduction code, you want to make sure it's benefit deduction. And then to set up a payroll type, 457 is the payroll type. They already have one set up. You probably want to specify a default account number for the amounts to get posted to. The payroll factor is one. The earnings are not MERS exempt and taxable. In this case, the taxable flag is checked because if you remember in the deduction, the deferred comp, we have deferred comp. So you want to make sure either one of these are checked and not that, or this is checked and you can both leave these blank. But do not leave it like this. You want to make sure this is taxable. If you don't want it to be taxable, you want to make sure this is checked taxable and either one of these are checked. Or you can check that to make sure that's also non-taxable. But you don't want to do this, make it exempt or deferred comp. Again, you can't have both of these and not leave that checked. So I just want to reiterate that. Typically, what I would do is keep the pay type taxable and the deduction code exempt or deferred, depending on if you want FICA and Medicare taken out or not. And obviously, there's no FSLA type because it's not standard earnings. It is just a benefit. So let me go back into deductions for a second. So as I said, we had calc type 9, 6 if you want, 12, which is MERS, and then these are all retirement reimbursed retirement. That's just a straight reimbursed retirement. There's MERS exempt and MERS. If you're not 100% sure what all these are, you can always call us and we can dig into them and give you exactly what these are because they all kind of sound for all these retirement ones. And a lot of these aren't used anymore. So like I said, the main ones you want to be using are MERS 12, 27, 9, and 6 are the main ones that you want to be using for your MERS deduction codes. And then employees, you go into the comp package. You can set up the benefits. You can click on new, then click on a benefit. I think they already have benefits, so I don't need to add. See, parameter one is percent override. I believe if it's 0, it'll still use the default one. 0 does not override it as a 0. And then let's see if I go to that's banks, my bad. Healthcare savings, which is HCS. So I go back to play comp package. Then they have the HCS deduction. So make sure they have those deductions. No, the other one. And again, all this is test data. These are not real numbers. These are all fake numbers. So 457 because they have the 457 healthcare savings. Well, setting up an employee is not that complicated. I want actually to go back to him. In his other deductions, again, that's the amount percent. That was one of our X1 was one of our 457 pre-tax. So if it's a employee, it'll just be amount plus the percent employer. So it's the other way around. So for an employer, it is amount is 1, percent is 2. And I think for an employee, do they have it inactive? Yeah. Create a new one then and make it X2. Yeah. Oh. So his amount is param 1 and because it's calc type 9. That's right. It's calc type 9 is amount is in param 1 and percent. So these are based on the calc type. If they were to be MERS, if it was a MERS calc type, it would be percent in param 1. And this is what I'm talking about with the filters on any banks, benefits, or deductions. We filter out all inactives. As you can see, they have a ton of inactive, so there's no reason to see them on an employee. So you can just see them there. So setting up a deduction isn't for benefits, you don't have to set up any parameters. For a deduction, you have to specify each employee's parameters because again, they may be different per employee. So payroll types. Then when you go into payroll, I'm going to go ahead and uncalculate my payroll deduction. And you go into payroll. Load. I'm including all my deductions, including my benefit deduction, such as where's my 457? There it is. My 457. It's just a regular payroll calculate and it'll show up as a deduction. Let me quickly look at the payroll journal, payroll reports, PR journal, select payroll, run the payroll journal report. And as you can see, this employee 061, this is the pay code. I got $95. And then we have the linked deduction code, which is the same amount. And that's the employer contribution. So it'll show up as the pay code and the deduction, as earnings and the deduction. So let me go to another employee. Same thing, they had a 457 and the 457 took it out in the deduction. So it'll show up as earnings and deduction. So then once you have your payroll calculation and the deduction amounts are correct and you're all satisfied with payroll, to upload the file to Empower, you're going to go into Utilities and click on MERS Export File, menu item, and this screen will pop up. Select your plan type, select your month and year. So I calculated for October, so I'm going to go October. Load the payroll data. If you want to load If you want to do this for multiple payrolls, if you do this once a month, then you select both payrolls, select what deduction codes you want to have calculated, and click calculate. And it'll calculate the MERS data and it'll appear in this list. Anybody that has data calculated or the deduction code. And if you keep scrolling down, we have the pre-tax, the post-tax contribution amount, employer and employer matching and employer non-matching. So I don't think we had any in this deduction code.
Also, as part of our change after the webinar session, we will be for the it's 5 categories. The employee, obviously, the employee portion will be in the employee column. Anything marked as employer non-matching will be in the non-matching column. Employer matching will be in the matching column, and then both the deduction obviously will go in the employee column, and the matching the match portion will go in the employer match, the calculated match value based on parameters 3 and 5. So I want to point that out for this training.
Even if you specify both, if there's nothing in parameter 3 or 5 for the deduction code, then there'll be no employer matching. And there'll be no employer matching. And the employer is just the sum total of these. So then you click Create MERS Empower. Let's just put that in downloads. But if I pull up my downloads, I will go ahead and open the file. It's just an Excel file. And this is what the file will look like. I recommend, if you don't have it on your desktop, use Notepad Plus because that's what Empower told me they use. Excel does change the formatting. Like all these columns say general, they're supposed to say number. And that's just so if you happen to make any changes here and then save it, it will overwrite it. If you just open it in Excel and don't make any changes, it won't. Obviously, because you didn't make any changes, you didn't save, it doesn't save the formatting, but so you can still view it in here. And this is your mandatory pretext, and this is your employer. And again, these are the columns that are taken directly from the deduction codes. So we didn't have any employer. I don't know if I have any that have employer. And not every plan has pre and post tax contributions. And here I only have one. Yep, I don't have any employer. But that's basically eventually we will get rid of this MERS legacy file button. We're going to keep it here for a little while. And for some reason, in case they have to use the old file, like I said, I don't think so, but we'll keep it around for a little bit, and then we'll be eventually removing that from the software as well. So I know I went over a little bit, but I'm gonna stop there for any questions on MERS. I recorded this We will be posting it to a video, and we're going to find some way potentially to make the slides available for you to look at the slides as well. But we will be recording this and posting it on our YouTube channel as well for you to go back as a reference for MERS and Act 51. And again, if you have any questions or other comments trying to set this up, something you didn't understand or have questions about, please email either support@cogitatinc.com, paul@cogitatinc.com are the two main ones you want to be using. George isn't always at his desk answering emails, so his response may not be the quickest, but the quickest way to get us is obviously call us on the phone. We're there to help. So I am going to stop there for any questions on MERS. You could always unmute if you want to ask it or just type it in the chat. I do also want to thank you all for attending. I know these are extra sessions, but we're hoping that you have found useful information on how things work in our software. That's our main goal with these sessions, is to inform you of how things work within our software, give you some kind of behind the scenes look at what's going on, like when you set up a deduction in employee calc and a payroll calculation, how is it actually being calculated? So instead of just trial and error or going through the calculating, looking at the numbers and then making adjustments, you can kind of get an idea of how our payroll calculation is using the different parameters to come up with the dollar amounts. All right, I'm going to give it another minute, and then if I don't see any more questions, I will wrap it up. All right, I'm not really seeing any questions. If I don't talk to you again, have a great holiday. I will see you on the 6th for the benefits, and then again on the 13th for our regularly scheduled monthly webinar. So have a great rest of your week, everybody.
You are now working smarter with ProFund Accounting. Thanks for watching. Be sure to like this video and subscribe to our channel for more content like this.